Hello, everybody, son. Happy New Year to you all, son, and welcome to Forever Slow Stroking the Podcast, episode 77, son. I really appreciate y'all tuning in. It's been a long run, so I know I didn't do an episode last week. We had Christmas going on, so I just wanted to take a break from that and just be able to focus on everything else that I had going on, right? Also working on some new stuff, so stay tuned for that, right, son? And also, please, if you're enjoying the content, like and subscribe. Use the links, get free stuff, son. You already know how it goes. I appreciate that. But look, let's go ahead and get into it, right? So some 2022, overview setups, right? These are some things that I'm really looking at that I think will be very valid, especially for the opening of 2022, right, son? First, I'm going to just go ahead and dive right into Spy, son. I always got to start with Spy because when you look at Spy, you can kind of see how the market, how the market with this ETF is continuing to just run up, right? And I've been doing some charting on Spy for some time, really, but I turn my charts off, like my chart drawings off for just this episode, so that way you could just see a clean chart. And I want to just point out some upside that I have for Spy, right? So I'm looking at Spy right now. I use a trading view for my charting, everything like that. But looking at my Spy stuff, and I see potential upside for Spy. I need some dates here. Give me some dates. Oh, I'm looking at the weekly chart, by the way. So going into January, I see Spy potential like it could hit a high of like 500, really. That's what I'm seeing. For January, Spy could hit $500. Well, is that going to happen? I really don't know. But the way that this market is pushing, that's the high of January that I'm forecasting. I'm forecasting a high of about $500. Hopefully it doesn't run up that fast, because if it does, then that means that the market will be overextended very soon, and then it'll just drop back down and it'll hurt a lot of people, right? So I'm not really looking forward to that, but that's something that I'm seeing. So this has been proven many times. If you buy a 2-year call on Spy, 2-year call Spy before the beginning of the year, and you let that joint run for 1 year, you're guaranteed to make profit unless it is a full bear market. And that's something that you also want to pay attention to. I'm seeing gold very bullish, right? Gold moved a lot today. Gold very bullish. And, Spy hasn't really moved up. It's actually down for the day. But what does that mean? That just means that people are sitting still and they're hedging. And they're not trying to make money on the downside. They're not adding more to the upside. They're just sitting still and they're adding on to things that are going to preserve money. Not so much as make money, but preserve money, right? But going to the next thing, Lucid Motors, right? Lucid Motors, on the weekly chart, Lucid Motors is showing this nice, strong, bullish engulfing candlestick after bouncing off of the 20 moving average. I believe this is the 20 moving average. Let me just make sure. Yep, bouncing off the 20 moving average. And I'm just like, dang, son, this is valid. I like to see this. This is almost like a bull flag, and it's sitting at a nice support area, halfway, at a halfway mark on the upside that, it made a strong bullish move. And now we're at the midpoint of that strong bullish move. Also, the same midpoint at the strong bearish move that we had some time ago last year. So we're sitting at this point, right? And we've never been here before consolidating. So we're consolidating here, and maybe this is just the rest that's needed so that we could push up to the upside. Typically in the beginning of the year, not saying it will happen, typically in the beginning of the year, Lucid does have a strong move. So I'm looking forward to that, right, son? That could be very valid. So please take heed. Next, Crocs. I do see Crocs being very, very, very bullish this coming year. Over the last few months, or last 2 months really, Crocs has pulled back quite a bit, and it did so in a rapid way. However, Crocs never really pulls back this rapidly, except for a time in 2020. 2020, Crocs started pulling back in January, and it kept going up until March 18th, right? So March 18th is when the whole market went bearish due to COVID, and Crocs quickly continued a nice smooth uptrend. Nice smooth uptrend happened with Crocs, right? And then it started to move rapidly up, right? It started moving rapidly up, starting in April, at the end of April. And then Crocs not randomly, but Crocs double topped at around 183. And then that's when it started to pull back. But I still see the original trend for Crocs is showing me that I can buy in Crocs around 115, 114, and ride Crocs, pause, and take Crocs up to back to like 150 or even 200 eventually, right? 200, if I'm being conservative, 150, 170. If I'm being, optimistic, next year around this time, 230, possible, right? So that's something that I'm saying with Crocs, and I do want you all to just understand what Crocs is doing, right? Crocs doesn't just make shoes for people to walk around. I mean, I'm lying. That's exactly what they do, right? But who's wearing these shoes, right? You have nurses, RNs, nurses, techs. These people are walking around the hospital wearing Crocs, right? You have people working in retail. They're wearing Crocs. People working from home wearing Crocs. Going to vacations wearing Crocs. A lot of people are wearing Crocs. Me, myself, I do not like the shoes. However, I love the money that trading this brings to me. It's very simple to trade Crocs. And I think that this is a great opportunity. I do think we're going to have another bearish week on Crocs coming up. And then after that, once we hit this, around this 115 area, then I do see Crocs being very bullish. I did a play on Crocs this week or last week, and it turned out very well. So please do not let Crocs slip out of your hands, son. Don't overlook Crocs, don't disregard Crocs, what I mean to say. Now, crypto, Bitcoin, I'm gonna go ahead. I'm gonna post this Bitcoin joint that I have. I have a chart on Bitcoin. I think it's a daily chart. I have a daily chart on Bitcoin that shows how Bitcoin. Well, I've drawn this chart about a month and a half ago, I believe. And Bitcoin has been, running with this downtrend that I've had on this chart for quite some time, right? And the reason I haven't been buying Bitcoin is this is the very reason I haven't been buying Bitcoin, and I'll show you this chart, right? So Bitcoin is finally broken out of my downtrend to the bottom side, though, to the downside. So what am I doing? I'm waiting for Bitcoin to hit about 40K, and then I may start buying Bitcoin again. Ethereum has hit, has hit a buying zone for me personally. Do I think it's going to go down a little bit more? It may go down and touch the 100 moving average, or it may go down and touch the 200 moving average at some point. If it touches the 100 moving average, I'm buying. If it touches the 200 moving average, I'm buying. It doesn't matter. I think Ethereum is going to be very valid with time. And just like all the other cryptos, right? It's Bitcoin, Ethereum, then the rest. So that's how it works, right? But I know I was talking about Lucid, and I want to go back to talk about Lucid real quick. Because I do think Lucid is very valid. GM also seems to be very valid with Lucid, right? I do anticipate a strong bullish move on GM as the year starts, right? As we kick off this new year, maybe a lot of the EV stocks will and auto stocks will take off, right? So let's just focus on these things, right? You could easily sell calls on Lucid at $30-something. You could easily sell calls on GM. These are very simple trades, but there's much more to know. But look, son, that's really all I have for y'all. Thank you all for tuning in. If you need me, just hit me. This is episode 77 of Forever Slow Stroking the podcast. I appreciate y'all. All right, son, I'm out. Oof.